Hello, everybody. Welcome to Adjusting Journal Entries Account for Accounting Part 3. What are the typical adjusting journal entries? So when we're going through and looking at typical adjusting journal entries, and this is really why it can help to have these memorized, right? And the one thing about accounting is we tend to repeat ourselves, right? That's why any type of accounting internship better be paid because we're going to be doing repetitive work, right? That's what we love about accounting. We get those JOBS, right? It's fun. Okay, so when we're looking at typical adjusting journal entries, right? So over here, the initial transaction, the DC is not for ACDC, right? This is going to be for debit and credit or Washington, DC, right? So when I buy equipment, right, I'm debiting equipment, I'm crediting cash. The typical adjusting entries to show the use of that equipment, I'm going to be debiting depreciation expense, and I'm going to be crediting accumulated depreciation on that equipment. I can't even say depreciation right some of the times. Thank you, Gary Reibold over at IBC for helping me overcome that. So, but again, to show the use, we're going to debit depreciation expense, credit accumulated depreciation on equipment. I'm going to make separate videos for this to go through, but this is just an overview. If I loan money to somebody else, what's the entry? I'm going to debit loans receivable. I'm going to credit cash. Now, that person that I've loaned the money to is going to owe me interest. So even if they don't pay it to me, I need to record interest revenue. How do I record those revenues? ERDC. I'm going to record that with a credit, debiting interest receivable. If I've prepaid for consulting services, meaning I've given somebody money and they're going to perform services for me in the future, crediting cash, I'm going to debit consulting services expense, crediting prepaid consulting services to show the use of those services. This one over here, it's also a prepaid item, but I'm including it here because you'll see prepaid insurance many times in accounting textbooks and exams, or just in the material. Here, we're going to be debiting prepaid insurance, crediting cash. But as we start to use that insurance, we're going to be going over here, debiting insurance expense, crediting prepaid insurance. One of the questions you might be asking yourself is, Bennett, why did we use this accumulated depreciation on equipment? Why aren't we just crediting equipment? It's because equipment will be around for a long time, hopefully, unless it's that 7-something series. So right over here, I'm going to use what we call a contra asset account. Again, I'm going to cover this separately, but unlike that, the insurance policy will disappear after the period of time. When I buy office supplies, they're an asset until our employees take them. No, I'm just kidding. I'm going to debit office supplies, credit cash to show the use of those office supplies. I'm going to debit office supplies expense and credit office supplies. Over here, when I get money for services I have not yet performed, I'm debiting cash, crediting unearned revenue. Once I start to perform those services, ERDC, I'm going to credit that revenue and I'm going to debit unearned revenue. Over here, I borrow money. I debit cash, credit loans payable. Do I borrow money for free? The answer is no. I've got to pay interest. So to show the use of the cash over time, I'm going to be debiting interest expense. I'm going to credit interest payable. Now, this last one, if I sign a contract and I'm going to be receiving services, but I don't pay any money up front, I still may need to do an adjustment. Remember, my expenses have to show the benefit I've received from it. So I may need to debit consulting services expense, crediting accounts payable. Likewise, if I've signed a contract, but I'm going to be providing services to someone, even though there's no money exchanged, even if I have not sent my customer an invoice, right? That invoice is going to show the work we've done and it says pay me, right? Even if I haven't sent over that invoice, what I'm going to go ahead and do is I'm going to debit accounts receivable, meaning that they owe me the money because I've done the work, and I'm going to credit revenue. So those are the typical adjusting journal entries. We're going to be going through all of these here in this video sequence. But again, I want to make sure that you have the proper introduction to them. You also might be saying, Bennett, could there be other ones? And the answer is absolutely yes. But these are going to be some of the more common ones that you're going to go through and see as you're starting out on your studies in accounting. So I want to thank you. Please leave any questions you might have below. And I appreciate your liking and subscribing to these videos. Have a great day.